In this video, you will see what are the best stocks that you should buy right now in September 2022 if you want to have some growth and at the same time receive some interesting cash flow from the dividends. To choose the different stocks that I will present to you in this video, obviously I first started with checking out what is the current situation on the market with the war in Ukraine that won't stop anytime soon. But the biggest threat to us investors is the high inflation that is threatening all the market in general. However, with the recent increase in the rates, we've seen that the growth of the inflation has slowed down. After I've checked out what are the best companies with the best business models that are the most undervalued right now. So we will see together what are the customers of the company, what are they selling, and where are they selling it. But we will also check out what are the financial ratios of the company to see if the company is really undervalued at the moment. Now let's take a look at my pick number 1. The first stock that I've chose is one that is really known by all the different dividend investors in the world and that is pretty much appreciated by someone named Warren Buffett. And of course, I'm talking about the company Coca-Cola with the ticker KO. This company acting in the consumer staples sector has a lot of history to its name. Originally, when it was created more than 100 years ago by the Dr. John Pemberton, it was sold for only a couple of cents in a pharmacy in Atlanta. However, through time, this product has been able to build a strong and solid name for itself. And now it's making $1 billion of revenue each year. Even if this company has more than 135 years old, last year it has been able to generate about $40 billion in revenue. While Coke has been developed and distributed all over the world, it has still been able to develop some other brands. For example, they have developed products like Vitamin Water, Peace Tea, Sprite, Body Armor, Fanta, Dasani, and way more. But as you can see, the big part of their brands is coming from the drinking beverage. And on that side, they are fighting with another giant in the market, which is called Pepsi. So why did I personally choose Coca-Cola over Pepsi? Well, even if technically Coca-Cola has made less money compared to Pepsi, I still believe that at the moment it is more undervalued compared to its competitor. And I will share it with you in the financial analysis. But I personally believe that those two companies are very interesting for anyone that is looking for some interesting cash flow from the dividends. And in my case, I believe that both of these companies are also very interesting since they have some great subsidiaries in both cases. And obviously, this have the impact to reduce the risk. We can see that right now Coca-Cola has been able to perform pretty well compared to other companies, and this company in terms of valuation worth a massive $272 billion with a slightly higher PE ratio of 28 compared to the average on the consumer discretionary sector. However, it is pretty much the same as its competitor Pepsi. However, what is really interesting about this company is the high profit and operating margin of around 23% and 28%, combined with a massive return on equity of about 40%. And as I shared with you, they have made about $41 billion in revenue, with an increase of about 12% in their quarterly revenue. But we can see that this company sits on only about the fourth of the cash compared to its debt. But in any case, they are able to pay a massive 2.74% of dividend yield with an okay payout ratio of about 78%, which means that they are using a lot of their retained earnings to pay the dividends to their shareholders, but they still have a certain part to reinvest in the company. And we can see that the total revenue of the company have been increasing since the past 3 years, which has had the impact to increase also the earnings before interest and taxes. We can see that it's pretty much the same for the operating cash flow that have been increasing in the past 3 years, which has had the impact to increase as well the free cash flow. And what I really like about this company is that they've been able in the past year to beat each and every single time what were the earnings predicted for them. My second stock is another stock that is really well known around the world, and it is a company that is acting into the technology sector. I'm actually talking about the company Alphabet with the ticker GOOGL. This company that owns DeepMind, Verily, and Waymo is more known for holding Google. And in my personal point of view, Google is the most interesting stock in the GAFAM. Because of its high importance worldwide, I personally believe that Google is the best GAFAM to invest right now. Obviously, here I'm not talking about the fact that Apple, Amazon, Facebook, and Microsoft are not important, but I'm talking about the fact that Google, in my opinion, is more important than them. The first reason is the fact that Google at the moment owns the largest search engine optimization system in the world with more than 90% of the total market. So if you're looking at the moment to search something on the internet, you're probably already using Google search. This company also owns YouTube that you are currently using, and that is currently the second largest social network platform in the world with more than 2 billion of monthly active users. And with the high expected growth in the future in the video sector, YouTube has some strong possibilities to stay at the top of the line. In fact, at the moment, it is still the #1 leader, and it has been able to adapt to all the different threats that it has lived, for example, from TikTok and from Instagram. To fight them, they have been able to include a new browser that is called the Shorts. But what is really the most astonishing about Google is all the different services that they are offering. From Google Maps, Gmail, Android, Google Drive, Chrome, and way more, they have been able through time to develop a massive list of different services and products. All of them have helped them to generate more than $250 billion of revenue last year. However, while we are still into a recession, the advertisers are usually paying less money for the advertisement. But even with all those restrictions, they have still been able to generate some massive profit. So the most affected people are us, the small creators. And even if I personally am not making any money from YouTube yet, but all the small creators that are using this money to feed their family and be able to live might be a little bit in trouble in those times. But I personally have some high hopes for this kind of company. Also, the fact that the board of managers has decided to make a new split in July makes that the current stock price is more affordable for everyone. Because instead of paying about $2,500 for only one share, you can now obtain about one share for about $130 per share. And we can see that recently, just like all the tech, this stock has lost also a lot of value. Personally, I won't hide you that this is one of my favorite stocks, and it is also one of my biggest holdings in my portfolio since I'm aiming for a lot of growth. But if you want to see why I personally love this company, check out the video that's going to be right over here that explains you why Google, in my opinion, is the best GAFAM. And for the fundamental analysis, we can see that this company worth a massive $1.45 trillion with an insanely low P ratio of only about 21, which is pretty lower compared to the average of the tech sector. But what is also crazy is their profit and operating margin that is close to 30%, as well as their return on equity. As I shared with you earlier, this company has made about $278 billion in revenue, which represents an increase of 13% in their revenue in the last quarter. And despite giving a dividend to their shareholders, this company has a massive amount of cash compared to what is its debt. And despite having some great results, we can see that in 2022, they haven't been able to beat what were the predictions for their earnings. However, they have been able each and every single time to beat the predictions in 2021. For my last stock, I've decided to go into the Canadian market now, and more precisely into the financial sector, because you might probably know that in the past couple of weeks, the financial sector has been really hit hard by all the different increase of the rates. So I believe that right now it could be a great time to invest in some of these undervalued companies in that sector. That's why today I'm presenting to you the best, in my opinion, member of the big 5 banks in Canada, which is the bank TD with the ticker TD.TO. Personally, I've decided to pick this bank over some other big banks like Royal Bank of Canada or Nova Scotia Bank because I believe that it's the most undervalued bank in Canada at the moment. This bank is making the biggest part of their revenue from the services offered to their customers. They notably offer many different kinds of loans, for example, some personal, some commercial, and even some house loans. But as a good bank, they also offer many different credit cards, but also some saving and some checking accounts. And just from last year, they have generated about the same revenue from Coke, about $42 billion. This makes it one of the largest banks in North America, and more precisely, the 26th largest bank in the world in terms of assets under management. In total, in 2019, they had about $1.3 trillion under asset management. And also, as I told you, the stock value has been dropping a lot in the past couple of weeks. Eventually, this bank will continue to grow in value, and it will continue to give some excellent dividends to their shareholders as they have been doing since the past couple of years. So there is definitely something to do with this company.
In terms of valuation, this company worth a whopping $155 billion with an excellent PE ratio of only about 10. They also have a great profit and operating margin of around 34% and 42% with a great return on equity of about 15%. And as I shared with you, they have made about $44 billion in revenue with a slight increase of only about 4% in the last quarter. But this company also have a lot of cash compared to what is its debt, which helped them to give a massive 4.15% of dividend with a great payout ratio of only 41%. We can see that in the last 3 years, this bank have been able to increase their revenue, which has led them to receive some higher net income. And this company has always been able through the last year to beat each and every single time what were the predictions for their earnings.
Now that you've seen what are the best stocks that you can buy right now in September 2022, you might want to know what are the best dividend ETFs that you can buy right now to diversify your portfolio, but at the same time minimize the risk and increase your potential return. To do that, check out the video that's gonna appear just right over here. And of course, to see the monthly updates to know what are the stocks to buy each and every single month, make sure to join the Noel family by subscribing to the channel for only $0.0, and I will see you soon. Peace!